Good day, everyone. My name is Rebecca Blumenstein, and I'm the Deputy Editor-in-Chief of the Wall Street Journal from New York. I'm very happy to be here today and to introduce my distinguished panel. We're here to talk about the disruptive trends that are transforming finance, and particularly digital disruption. First, on my right, I'd like to introduce Calvin Chin. He's co-founder and CEO of Transit here in China and has been investing in digital disruptors in the finance sector and beyond. Bunty Bora, who heads Goldman Sachs' operations in Bangalore, comes to us from there. Alan Rice, who is CEO for Swift, based in Singapore, and heads up EMEA and Asia Pac for Swift, which handles a stunning 50 to 60 million transactions every day. Oki Masamoto, Chairman and Chief Executive of Monex Group from Japan, and you were one of the youngest partners ever named at Goldman Sachs at age 30. 20 years ago, I read in your bio, which is quite impressive.
You're talking about the past.
And last but not least, V.S. Parthasarathi comes to us from India, where he's head of IT and CEO of Mahindra & Mahindra, which contains no less than 18 separate companies, I'm told. And obviously, India is going through a very interesting time now with a new prime minister. Before we get started, I wanted to just ask you, the audience, a couple of questions to get a sense of where you stand in the digital disruption chain. How many of you have done banking on your mobile phone? Could you please raise your hands if any of you have used a mobile phone for banking?
Can we as well?
That's pretty impressive. Now, pay is much in the air after the Apple announcement today that they're moving into the pay sector. How many of you have actually used a digital wallet in your transactions? Okay, that's interesting. So far, fewer people have used digital wallets. Well, I'd like to open it up to our panelists. Where do you think digital disruption stands from your perch in finance? Calvin, what do you see in China? We have a lot of incumbent banks. We have Alibaba growing very fast. Is this something that's gaining momentum in China?
Oh, absolutely. I think disruption in finance, if we can think of emerging markets as a ripe location for leapfrogging and not having legacy infrastructure or technologies, legacy consumer behaviors, I think you see China as a case in point where new technologies, new business models can emerge quickly and rapidly and explode into the new consumer behaviors and create business models and opportunities for all kinds of new and existing market players. I think I would say, just kind of in a word, what I think maybe as a framework makes China particularly interesting is a large-scale market with receptive consumers, tremendous mobile and internet penetration, so the infrastructure and telecommunications infrastructure in place. I would say regulatory openness, despite some of the strictures in traditional finance, you can see characterized by online payments and how that market has developed over time. I know Alain has more to say about that. But also if you see now bank licensing to Tencent and Alibaba and these dominant players in other sectors and other parts of consumer interactions with commerce, I think we're seeing tremendously exciting new developments where Chinese consumers are quickly and easily using their phones now, using WeChat or an instant messenger client to buy goods, to order food, to pay for the transportation in a taxi. All very new and exciting things that I don't think we see even in Silicon Valley or in the U.S.
Bunty, what's the reality of all of this digital innovation on the ground? Sometimes it sounds a little bit easier than it actually is in reality.
Yeah, look, there are some big macro observations I would just make, and then I'll give one more graphic metaphor for this. Finance in the wholesale sense is an intermediation business, and financial intermediation has existed for thousands of years. I mean, it's one of the oldest professions, if you will. And the big disruptive element of technology is that disintermediation, where people can directly access what otherwise used to be either privity in terms of information, or in terms of capital or resources. And so it's a huge democratizing force. But if you took away the context of this technology uplift, if you just looked at the core finance business lines or activities, they're going through their own generational change, notwithstanding all the technological disruption. We're going through probably one of the largest upregulations of the ecosystem in 7 or 8 decades. Certainly amplified by the fact that it's global. It's not just a U.S. or a U.S. and Western Europe or a post-World War II. This is like a global uplift in the way that regulators, central banks, market infrastructure, intermediaries like ourselves, consumers, are all having to change the way that they, and tax authorities, all changing the way that they think about the conduits of their business. And at the same time, you have these emerging economies that have an incredibly large demand for much, much bigger financial infrastructure than they already have. But this is where I'll just mention quickly kind of a reality statement about this. So a few of us last year, actually as part of one of the World Economic Forum events, which was the East Asia Summit in Myanmar, I hope some of you were able to attend that, a few of us were able to visit one of the larger banks in Myanmar, one of their main offices and branches. And Myanmar is a country with 60 million people, natural resources like we've never seen, strategically located between India and China with a port. I mean, it's an unbelievable story about a frontier market. But you go to the bank, and primarily it seems that their business is people bringing in large piles of actual physical cash, having that cash counted, and then having that cash stored. We were taken to the credit department, and we were shown the loan book. Now, the loan book was actually a book. The book had about 300 or so line entries in it of actual handwritten, we lent this much money to this person, and Mrs. this and that will repay on this date at this rate of interest. So on the one hand, we talk about disruption, we talk about leapfrog, we talk about all this, but then you have these markets, and even in markets that some of us live in, where you have sophisticated financial capability, you still have an underserved population, and in some cases, and we would know that in India specifically, a very, very large underserved population in terms of real access to financial services. So, I hope that I live forever, or at least for a long enough time to see some of this, but I'm not sure it's happening as quickly as we want it to.
We hope you live forever, too.
Thank you. That's very nice of you, Calvin.
Ellen, is Swift a disruptor or a disruptee in all of this?
I think certainly at this point of time, you may know that actually we are one of those Stone Age animal that has been created by the financial industry 45 years ago. And the purpose of the institution at the time, which is still today, basically, is to making sure that financial transactions can flow seamlessly in between different countries, different institutions, and so the same way that blood will be flowing into your veins, right? And that's what we do. Now, clearly, what we see nowadays, like you mentioned, for Myanmar, I can give you multiple examples, like Bangladesh, or what's happening in Africa and all that, where clearly banks haven't really evolved fast enough, especially in opening up their technology to ensuring that everyone can play into the same arena in terms of offering services to their own customers, especially the retail customers. This being said, we see that this is changing. I think, especially when we talk to our clients being our shareholders, we see clearly those people changing their mind and trying to define ways in which it can be actually reinserted into the business, if you like. Initiatives that are taking place, for instance, in Australia, even in Singapore, where I'm living, where clearly you've seen banks now developing, as an industry, new payment systems that are much more seamless, completely interactive, and completely free. 3 months ago, the Singaporean community introduced a new payment system called Fast. It's literally interactive. You can pay with any sort of device you want to have. Before you were paying something like 1.5 Sing per transaction per payments, today is 0. So that tells you also, that the banks are also reacting to the changes happening. What I'd like to say also is that one of the main reasons why you have all these new entrants, and you mentioned Alipay, there are many more examples in the world. One of the main reasons is because for many years, and in many instances still today, banks have kept their own IT environment very closed. Basically, everything is completely sealed. You don't have access to all this. Some of the banks have, though, started opening up their own environment through the cloud computing. You have the emergence of APIs that basically enables other companies to start interacting with bank systems as well. So that if you look at the context of Alipay, that's what they've done. Basically, they started working with all the banks, making sure that the payments platform of Alipay is seamlessly interconnecting with all the bank system as well. So much so that they've started actually adding the value-added services that banks are today not capable to do. And the problem that banks are now facing is that in doing so, if they're not reacting intelligently, is that they would be left alone with the sort of low value kind of service like the end of the day settlement whereby where all the other platforms like Alipay and others will be able to start really working with all the data they have, the payments and all that, to bringing up much more valuable service to the community. So there is a real challenge. At the same time, I think even for the financial industry, there's still actually a major opportunity to leveraging the position that they have today.
Okay, how is this playing out in Japan, which is kind of the quintessential developed economy in this equation?
Well, actually, in Japan, digital wallet is very, very popular. For example, myself, for the taxi, for trains, for convenience store, I don't use cash. I always use phone to pay. Okay, so digital wallet or digital settlement is very, very big in Japan, and I think we are moving into the new era, whereby, for example, even central bank, Bank of Japan, is now thinking about when you calculate the money supply, those digital cash is not included into the M2, the money supply. But now we can't hold it. We have to take all those into account. Otherwise, we cannot really grasp what's happening in the economy. And also the government, Japanese government had been very conservative, but the new cabinet and government are very innovative, and they are trying to introduce those digital settlement as currently it's happening just kind of outside of the nation. Okay, digital settlement is more like a global phenomena, not like a local phenomenon. Okay, but the settlement business has been very important business for banks, and the banks are very important for the nation because at the end of the day, the nation has to use taxpayers' money to save bank. So if the settlement business is going away from the bank, it's kind of a headache for the government, I think. So even Japanese government now trying to address this issue to understand more about this digital settlement and try to let the bank get involved directly into this digital settlement business. So I think this digital thing is becoming more and more the mainstream thing for the economy.
Partha, a lot of action expected in the banking sector in India. Yes?
Yes. Bunty started by saying there is a two-eyed monster here. One where the digital is kind of taking pace so fast that it's leaving everything behind. On the other hand, we have people who are not even included. So inclusion is going to be a very big theme when it comes to financial development in India. And in a sense, the Prime Minister just declared that over 800 million people should start having a bank account in the new era. So this is going to be a game where on one side it will be these people trying to catch up, and on the other side the digital actually taking great speed. As an IT head and the CFO, it's often the deadliest combination in terms of saying where I cannot say that digital and IT doesn't play a great role in finance. So it will always tend to play a very big role. And I just wanted to kind of talk about digitization here and how it's going to change the face, I believe, in the next few years. So I just wanted to differentiate between digitization and digitalization. Digitization is already there in many sense that it does, every transaction gets digitized sooner than later, and so will finance transactions. But what we are now talking about is digitalization, where you're trying to do not just one transaction, but entire ecosystem. And just let me give an example. So if a car meets with an accident, so the car then gives a message to say that the hospital is going to receive a patient with this kind of medical condition. It's going to inform the insurance company. It's going to insure the next in kin. If there is another guy involved, it's going to tell him what are all the implications for the other person in the accident. And not only that, it's going to even tell his children are back at home and his spouse that this is what is happening, keep the checkbook ready because you'll have to now deal in terms of some money. And that's the kind of change that we're going to see as we go forward. And this will be in IT language called business movement, because we are now going to create value through the movement because we can capture. And I kind of predict that the next war is going to be fast, who owns the business movement? And therefore introduce a new term called PBT. We all know what it stands for, profit before tax. But in future, I think it will be known for people, business, and things. So it is going to kind of look at a very new term for PBT in future. And the manufacturing industry that I come from says about PPM, or parts per million defects. But the new world will say people, process, and things. So all these terminologies are going to change. And as we go forward, this digital will stay. And for India, where technology is kind of got to catch up in this area, it may actually allow us to leapfrog. So I'm watching this world with a great amount of things that digital is going to be the new thing. Africa, mobile banking has done a lot more. India is starting to catch up, but I hope that soon people will use, as Oki had said, that you can use phones to pay for everything in the rural India, where now even an account is not being maintained. So it's going to be a fun thing.
Could I follow up on
Of
something
course.
Partha was talking about? So this concept of 800 million new account holders, or banking the unbanked in India, I think maybe we need to expand our idea of what accounts are, or banking and unbanked are. If you think about in China, where 60% of adults have maybe traditional banking accounts, and what's happening on the new platforms, if I started by just making some purchases on Alibaba's Taobao, and I had some excess cash on that account, and now I've used it to invest into a mutual fund product, and then provide credit history that might access a loan on the consumer finance side, that's a really interesting new way to onboard financial services customers.
Yeah,
Absolutely.
that is exactly actually what I wanted to say before. Is the slow will be the financial industry really adopting these new technologies and getting to the end banks and eventually offering them the possibility to eventually using the surplus they have in their accounts, investing them onto other financial services, insurance policies, or whatever the system that you have. The more you're going to have new entrants that like Alipay and others into that space. Though the question also is that, I think you mentioned this, Rebecca, before, is that, or you mentioned this actually, is that, banks have faced over the last 3 or 4 years, a tsunami of regulations, right? And that's reality. The other reality is that all these companies, the Alipays, the Alibabas of all the world, don't yet have to face all this tsunami of regulations. The more they'll get into this, the more, of course, they'll get under the scrutiny of the PBOC in China, the FBI, and I know what it is actually to face FBI regulation in India. Believe me, it's not that easy, right? Because these people are responsible to making sure that the whole financial industry can still work, right? And that is their responsibility. Can you imagine that there would have been some disruptive technology involved into the days after Lehman went burst, right? Hopefully at the time, the central banks had put together systems that have been able to sustain the load. If the day after, none of the system would have been able to work appropriately according to the failure in adoption principle, there would have been actually any blood into the financial veins. That would have been over. It would have been actually the end of the financial systems. Simple, right? So hopefully you still have these regulators that are behind the system to making sure that the whole system still follow a certain number of rules that ultimately will defend the interest of the users, of the citizens. So I'm with you, but at the same time, all these companies sometimes will also start facing the pressure of the regulation. And believe me, one of the key issues that banks are facing today is that, and I'm supporting this regulation in a way because they help making the financial systems much more sustainable in the future. But if the only thing that as they have so much to invest to be compliant to all this regulation, they have actually little to invest on new technologies, new services, and that's the main issue that they have as well.
So is that really an unfair advantage the new entrants have over the incumbents? And actually, there's more broadly, there's a feeling that this disruption is taking hold in the emerging world versus the US and Europe, because the banks there are, quite frankly, under a regulatory burden?
Well, I think it's going to happen everywhere. I think we should separate deposit and settlement. And for the government, deposit-taking entity is very important because they have to use taxpayers' money at the end of the day.
Yeah.
But settlement is different. So all this, the digital innovation happening is this settlement side. Okay, so in that sense, settlement business can be totally away from banks.
Right.
And I wonder, I didn't read the article carefully, but the iPhone, a new iPhone, does it have NFC?
Yeah,
It does.
Yes.
It had an NFC.
Apple will dominate the settlement. It's easy at least for the individual retail people settlement with smartphone with NFC.
Yeah. If you don't, if you don't look at regulation only from the Western world, and sometimes Reyes did mention that RBI regulations are, in a sense, very tough. And I believe this toughness comes from wanting to protect. And in a way, it has protected when the crisis hit, that it didn't hit as much India, the financial crisis, because of some of these regulations which have been created. So going forward, even as we say, digital world will take by storm the entire industry. The security keeping pace is going to be a key enabler or a detractor. If there are too many frauds which happen before things settle down, everyone may kind of start clamping down on this entire initiative. And it cannot be any more cyber security in a passive way. It has to be very much in the active way as transactions are happening. So clearly that part developing is an important enabler to this digital revolution happening, not just for settlement, like you rightly said, more on the deposit taking side, but also for settlements, in a sense that to enable and
that's actually, just really quickly on that, I think we can't emphasize Oki's point enough, because finance is a term that attracts a lot of different ideas, but all of them are viewed very, very differently by regulators, by participants, right? So, I would use slightly different terminology, but there's a transactional side which naturally or natively lends itself to the way that people behave now, which is mobile, which is connected, which is user-friendly. But then there's capital formation, which is going to have all of the same, in my opinion, legacy baggage that it has forever, which is that governments are going to care about what money is coming from where, the sourcing of it, and what it's being used for. Industry is going to worry about the macroprudential factors, and of course governments will too, and the systemic risk. Regulators are going to worry about individuals and whether their fiduciary interests are being protected, whether they're being exposed unnecessarily. And this isn't new stuff. We've had tulip bulbs, and we've had Florida real estate. We've had a lot of different excess moments, in time. And as we get this kind of intuitive native transaction world to evolve, like you said, there'll be residual cash left on the phone, and that'll start to become the beginning of financial or capital formation, which will then start to get you into the order world of finance, which then is, and by the way, the reason, and I think you wouldn't disagree with this, the reason why it feels like U.S. companies or developed market banks are so burdened isn't just because they're being regulated. It's also because they have large incumbencies that have been there. I mean, these banks and these financial institutions and these exchanges and markets are still in motion. So it's the difference between like building a new car and actually trying to change a tire and a moving one.
Right. So you would agree that banks like Goldman and U.S. European banks really face a big disadvantage or some strong headwinds?
I think disadvantage is a strong term, because what the implicit in that is that every one of us is in exactly the same businesses or have exactly the same business model. This is always been a very, very segmented industry, and I think that actually technology as a disruptor will allow more specialization, more different participants to enter into the supply chain at the point where it makes the most sense. I mean, taking it away from even finance, it wasn't that long ago where if I was a Silicon Valley technology innovator, entrepreneur, I would have to think about software development in-house. I would have to think about the technology infrastructure. I would have to think about a lot of things, and it would cost me millions, maybe tens of millions of dollars. Today, I can host it on somebody else's site. I can get somebody else to be the development core for it. There are people who have expertise in the user interface. There are people who have expertise in the quantitative or the data science side. You know, it doesn't make the industry less robust. It makes it more robust, because you have real specialized players in each of those molecular parts of the supply chain. So I'm sanguine about the future. Don't get me wrong, I'm not the Luddite, but I think that, you know, we have to conceptualize the future as not being dominated by institutions that largely look the same, but by lots and lots of entities that look different.
You mentioned Africa before, and what's happening in Kenya is quite interesting, because you have a telecom company, M-Pesa, who is the largest banker in the country. I think $18 billion in transactions last year, and the incumbent bank trying to get their way, clawing back into this business. How likely is it, do you think, in India and in China and in Myanmar and other places around the world, that we could see phone companies,
Brazil
internet
as well?
companies, Brazil,
yeah.
just
more phones than
unlikely,
bank accounts.
Yeah.
unlikely entrance to the banking business, really leaving the industry far behind.
Yeah. I mean, if I were to talk about India, I can very clearly see that one thing they have more than anything else is mobiles now. So it's going to be an easy way, not just of communicating, but of doing many things along with the phone. So it's going to become a central figure, and whoever will own, so a telecom company can come.
Right.
But I'm also seeing going forward that it's going to be a view of business movements. So whoever is going to conquer that business movement would probably have more of a say, because you're just not talking about banks, then you're talking about insurance companies as well. You're talking about the city regulations in terms of whether it is the traffic regulations or many things like that. Or how does a fire engine or a fire department and a police department work? So, you know, where does it going to kind of have deep impacts is going to be seen. Whether it's telecom company which will have everything, or it will be many other people, including the people, not just the airwaves, but are capturing the business movement. Maybe IT companies have an equal chance as well going forward. So, but telecom certainly has a first mover advantage, as they've seen in Africa.
But one of the biggest pools of capital in the world is the Japanese post office. So, you know, maybe on the transaction side, it seems like the movement is one way, but the reality on the other side of the equation is still steeped in history.
And I do believe that governments will interfere into this situation.
Yeah.
You know, even we separate the deposit and settlement, you know, the government do not want to see those people's money to disappear.
Yeah.
And we can't just let telecom companies to take care of everything. So we're going to have to, I mean, they will bring in some sort of new regulations, I believe.
I think it's very fair to say that, I mean, getting to that space is that market is a very natural addressable market for all the telcos that you have any other place. But the reality also is that they will be only successful if in doing so they'll be capable to start developing in proposing additional services. I think this is one of the success of Alipay with Alibaba, is that it is a combination of a sort of superstore with a payment system as well, and the two together actually are highly successful, because certainly Alibaba, yes indeed, is capable to leverage and to work with all the power of data they are collecting through the payments as well, which is fabulous. Now, if they don't do that, they'll get to failure as well. And we mentioned M-Pesa as an amazing success of having a telco in Kenya getting into the payments business, these sort of virtual wallets and payments systems. In a few years, grasping something like 50% of the market in the country. But then suddenly, as they were not really capable to developing value-added services, they start actually expanding their services or conquering other markets. They try to go to South Africa, major failure. For the simple reason that you mentioned as well, because there they've been confronted with other regulation, other practices and laws in the country that made the model completely not practicable in that country. So I think the way they will be expanding, the way they will be actually proposing value-added services will define their success or no.
But to jump off that a little bit, I think the interesting thing in the China market is that the disruptors have their own advantages as well. So you mentioned Alibaba with a kind of integrated solution for the consumer. WeChat, when they really emerged into holding deposits and distribution of digital wallets, had already grown to 300 or 400 million accounts. And so I would say if you think about a disruptor having to, over time, migrate into a more regulated playing field, somebody who has that depth of customer relationship and profitability, frankly, is well positioned to work with the government. And as long as they're creating incremental value for those consumers from a perspective of, this is a business that 300 or 400 million people want to still see exist, then I think there's a conversation with regulators that can be actually, win-win.
And I can also build upon what you said when it comes to regulators. Ultimately, you mentioned this as well, that several times regulators and governments will step into the arena as well, for the simple reason that they need to protect the interests of their citizens, right? Yeah. And the best example of this is what is happening those days in Bangladesh, where Mr. Brahman, the so-called the green banker, the governor of the central bank, has actually has reforced the banks to create a new payment systems, a rural payment systems for the people who do not have access to anything, with the only difference that the central bank will propose its guarantee to those deposits, which is making a very strong difference to what is happening in other countries. So the central bank will be there really to protecting the interests of citizens.
Yeah. So you're concerned about risk. Let's tackle that. About in some of these countries where there's non-traditional players, short of what is happening in Bangladesh, you're worried that some of these non-traditional players could be adding risk to the system, particularly if there's a problem and suddenly there's no regulation, there's no rules to really dictate what happens.
For me, there are clearly risks that belongs to the sphere, right, which is about protecting the interest of the ones actually that have the deposit and bank accounts and all that. But you have also many of the risks that belongs to the way that those services will be proposed to the end customers, with the technology that's standing behind this, the networking side, cybercrime. I mean, it's fine to talking about, like we have 212 countries in the world and 11,000 institutions. But you need to making sure that all of that is actually really secured, right? And you can read in the press, right? Go every day in the press, you see leakings, right? You see, every day 30 million there, 45 million there that are being basically stolen by people that have a specialty, especially if you're coming from some countries, to hacking and getting into the system. So if you're not proposing a system to the people that is really secured from a protections point of view to the people, but also from a technology and access point of view, you're going to have some issues.
But I would say that regulators...
That sounds a bit like an argument of an incumbent, though.
Well, let's say, without risk, there's no reward, right? Certainly. So ultimately, I think there may be another obligation for regulators, which is, are these new technologies, are these disruptions net positive for industry, for individuals, consumers? And I think if we had the burden of not just protection, but of actually creating value, then I think we should see some risk, managed risk, that can keep the robust or unfragile system in place, but has to let new opportunities emerge.
That I couldn't possibly disagree with that statement, but that debate will oscillate. There will be moments in time, just like financial deregulation, derivative deregulation, where everybody thinks distribution of risk is great and it's creating engines, to power economies, and leverage is safe because we're much smarter. We have, great PhDs from MIT working on this stuff. And then instantaneously overnight, it's too big to fail, moral hazard, banks are too big, financial leverage is too concentrated, it's too concentrated on the one hand, it's too distributed on the other hand because we can't find it.
So should we mediate the oscillation and try to make it smaller then? Or?
I mean, look, atoms vibrate since the Big Bang, and I think that conversations that are policy-driven will vibrate, just as long as atoms vibrate. So I don't think that there's a way to stabilize that conversation. I think that there'll be some trial and error, but I think what I would argue for, and I think there seems to be like at least some part of the room that feels this way, is that as these interfering technologies or new sticky ways to access financial services, transaction, start to look more like sources of financial risk, financial exposure, that where governments might be expected implicitly to underwrite that risk over time, people are going to start paying attention. And the moment you have a crisis, people are really going to start paying attention.
Yeah.
So I don't think that it's impossible to foresee that.
Partha.
Let me just give you a contra view. We tried to say whether we should apply for the new banking regulation, new bank we were to apply for in India. And then we did this calculation saying I have to keep so much money for SLR, which is, keeping money with the government and doing this. And for the next 10 years, we probably will make lesser money than we'll make as a non-NBFC that we are, a non-banking financial institution. So this is all is happening because of the regulation which wants to protect. If you overlay the regulations to all the people who are holding money, and they are asked to prescribe to the same thing, then the attractiveness that is in terms of a financial standpoint will come down dramatically. Then the rubber will actually hit the road. And then they will say whether specialization wins the game in that era, or it is going to be these people who will try to manage both the selling as well as keeping money intact is going to win. It's going to be an important factor. And I think so far as the regulation is not there and only convenience is there, it's fine. But the moment you overlay regulation, and they have to manage all that regulation, which is one of the biggest problems that any bank faces, how to manage these regulations and be on the right side always. So I think it's an important consideration.
That's a good point. Okay, you're predicting this fight over regulation and more of it, and won't it slow things down then?
I have a new idea.
Okay.
So maybe the regulators, governments, may or should let banks do everything.
Everything.
I mean, so far, the regulators have been very protective, protecting banks, so that the banks cannot do, the merchandising or, gaming, those kind of things. Let banks to do that.
To get into gaming.
Gaming or Amazon type of business, whatever, and the banks has
banks get
capital.
bigger and bigger then.
Yeah, so that's another way to somehow balance the situation.
So as Amazon brings the fight to the banks, then they should bring it back.
Yeah.
Well, look, it's a little late to put new panelists on, but if we had a retailer, if we had a telecom company, if we had a technology-oriented platform representative here, my guess, I don't know, but my guess is that they don't necessarily want to be banks. They're thinking about offering financial services as a way to make their telecom or their device business much more attractive. Or they're thinking of financial access as a way to power their retail or their merchandise. In the same way that, we represent financial entities here. I don't think any of us want to necessarily become telecom companies or become, merchandisers, even if we had the opportunity, because again, there's a natural skill set or core culture, your corporate culture and customer base that makes sense for us to, expand and cultivate. But it may not be that smart. Just as a for-profit enterprise to try to branch too far.
But it's not only services. There are so much of settlements, payment, happening in those, Amazon or those places, and they are paying, or their clients are paying a lots of fee to banks. So if they take all things,
fair enough,
inside, then they make a lot of money.
I think you're identifying the nature of convergence. What's happening there?
Yeah.
I'd love to.
It was once said that there's two ways to make money: bundling and unbundling.
I'd love to open up this discussion to the audience. If any of you have questions, we could go on.
Disagreement.
Yes.
My name is Max Monkey. I'm the head of strategy at JP. Microphone, please. My question is actually, what do you see as the impact of virtual currencies on payments, such as Bitcoin and others? Do you see this as just a flash in the pan, or is this there to stay?
Thank you. Anyone want to grab that?
I would say I am a huge believer in cryptocurrencies, not just for transactions and not necessarily just Bitcoin, but I think the invention of the open ledger with the blockchain is fundamentally really technically exciting. And I think whether it is for transaction of value or whether it is for traceability of digital assets, I think this invention is going to affect financial services, not just on the transaction side and the settlement side, but also on the capital formation side too.
I think, I do believe that Bitcoin and those kind of things are very good. But again, the government will step in. For example, this is what I think. The U.S. government, the biggest treasury, biggest government in the world, they do love greenbacks, data cash. You know why? Those, they print money, and once those money go to the, weapon business or drug business, wherever, those money will never come back to treasury. So it's like a debt equity swap, right? So they issue paper as a debt. Now it will become equity. So if the digital cash take over the real cash, then the U.S. government cannot enjoy those kind of things. Okay? So I believe the government, like the U.S. government, the big government, will step in to somehow stop, to those digital cash to become
but
too
so is
large.
it stop or regulate? So I think there's an opportunity to regulate this technology, as is already happening in many jurisdictions, but I don't think you can stop it.
China tried to stop it.
Actually, 70% of transaction volumes in Bitcoin's exchange are RMB denominated. So it's not being stopped.
So this is not an area of expertise at all, but if I think in a parallel old-fashioned universe where if there's an independent Scotland, we don't even know exactly how to think intelligently about what the currency implications are. I mean, at what does it mean for a currency that doesn't have a nation state or doesn't have a sort of sovereign sponsor, and what are the implications there? And again, it goes back to the same thing. When it gets important, people start to care. When people start to care, the discussion really begins.
Yeah.
Alan, how would SWIFT handle Bitcoin?
I think I'm very much with you on this one. I think from a design architecture point of view, I think the Bitcoin approach, whether you call it Bitcoin or something else, there would be others, by the way, I'm sure, using the same sort of approach to market is a good thing. But again, I mean, I think the more it will be spread over in different markets, the more regulators, governments will start actually influencing this, or at least controlling what's the way it's being done. But frankly, if you look at the way it is done, it is a much more efficient way to dealing with currencies than the ones we have today, right?
Yeah.
That's the reality. If you look at from an architectural point of view, it's much more efficient.
And another irony is, Bitcoin got a bad reputation because of Silk Road and illicit activities transacting with Bitcoin. But fundamentally, with an open ledger, you could have nothing more transparent and traceable.
Yeah, but then from there you'll get to all sort of discussions about that's why governments will step in, or regulators, because you have all sort of issues around national debts, about sovereignty. I mean, currency is like the one thing that states have. Huh? It's like I have the dollar, I have the euro, whatever, but that's something that I have, and that shows the strength of your country or your people.
Part that Bitcoin in India.
Yeah,
It could be the
Bitcoin
answer.
In terms of cost, what is the cost structure of a Bitcoin-like operations versus the hard currency method that we have? And if eventually productivity and the cost of transaction has to win over, Bitcoin has a place in the world. Yeah, and some of these will go through much problems as you have defined, because governments will try to hold. So I think of this not as a general answer to everything, but as a niche area, which will do in certain areas very well, while government will try to kind of control bits of it, which it wants to still have the greenbacks and feel the money in the hand. So I think that will coexist, but there will be a place for something like Bitcoin, even in India.
Any other questions? Thank you.
Hi. A lot of this conversation around digital currency has been about digital currency as store of value. But I think where the real kind of revolution will be coming from, it will not be with these digital currencies as a store of value precisely because of reasons that you gave, but more on the application of the technology, which, as Kelvin very well pointed out, that the open ledger on the blockchain, once we start applying it to settlement systems, clearing systems, this is, I think, where we will start seeing a lot of disruption. And actually, not for the bad, also for the better, precisely because it can also increase not only efficiency, but also transparency of interactions and transactions in financial markets.
Any response to that? In Japan, is this like you mentioned, the wallet
Yeah.
expanding, is that disrupting, or is it kind of preserving the status quo?
It's expanding with a good harmony.
Oh, okay.
You
It
know,
doesn't strike me as a disruptive force.
Again, the currency is a very big business for the government. We have to remember. So as you said, as long as it's niche, fine. But once it becomes too big, the government will step in. So I think we have to. I mean, I'm not in the government, okay? I'm in the business. I love Bitcoin. I love digital cash. We have to be careful. We should keep this thing as not too big, just convenient, and then enjoy the transparency and traceability or convenience or whatever.
But I think with any new and powerful technology, there may be a tendency to think of how do we mitigate the risk by keeping it small or keeping it niche. We might have said the same thing about the internet. And yet, these powerful new technologies, they have a way of getting beyond our control.
I agree with that.
Yeah, you're right.
One thing that I'd like to come to, one point you mentioned in your question is about the point of transparency of the payment system, sort of clearing, settlements, and all that. As far as I'm concerned, what I believe is that there is nothing more transparent than that, actually. If you look at all the major payment systems in the world, when it comes to the Fed, FedWire, you go to the ECB, the Euro systems, you go to the BOG payment system, all of those actually very much transparent. And actually, you're really capable to trace any sort of payments that you have in the country. Banks, national banks are publishing actually, amounts of payments, a number of payments, amounts of payments, and all that every other week. I mean, they do that. I have some questions about the transparency of the big card systems those days. I mean, I don't believe that they are that much transparent. So I think we need to be careful about what we're talking about, because what happened recently with Bitcoin, for me, is far from being transparent. Far from being transparent.
And also, we should remember that there are always some people who don't like transparency. This will continue forever, right?
One thing that we haven't touched on much is the role of reform. And when you look at Alibaba, Jack Ma said he'd like to stir things up in the financial sector. And one has to think that part of what is happening here in China is that the government is perhaps using Alibaba and other companies to reform the banks. So we've talked a lot about risk, but can governments kind of strategically use these players to force change?
It's a very political question, I suppose, if you want me to project intention of the government in this industry. I would say, from my previous experience in online lending and peer-to-peer finance, the regulators and governance in China is actually very strategic, very sophisticated, very technically astute. And while I wouldn't say that this would be a weapon or a tool to encourage reform, I think they certainly would see and want to balance the opportunity of letting new entrants force a little bit of change. And so I'm sure they're seeing the costs and benefits and the trade-offs of it, if not saying, hey, Jack, why don't you come mix things up a little bit?
Partha, do you think that will happen in India? Will we see a kind of managed mix of new and old as we bank those 600 million people?
Yeah. If IT is one example of how things have transformed in India, when you jumped in and started using that as a mean of livelihood, we've not seen the big workstations ever. Yeah. And still, you adapted it, the entire ecosystem adapted it, new laws came in. I think technology has a way of getting and persuading many people because of the benefit it gives to the entire ecosystem. And government need not be persuaded by applications, but can be persuaded by benefits that it brings in. And I think we all cannot deny the benefits of these things. So eventually, yes, it will come. But just remember one thing in the financial world which doesn't apply to anything else, that you are trading with millions of people's money. And that is where it is not just about being in the sector. If another US kind of crisis comes in the financial sector, and that comes because this kind of non-regulated industry, just look at the kind of harm it could do. And that's why the security piece is so important for this to become mainframe. Yeah, and we need to look at that not as a means of stopping somebody, but as a checks and balances, which is more appropriate in financial industry than in any other industry, which is that. Because you are playing with retail people's money. That's at the end of the day, that's the game. And therefore, it's actually how much fast the government can bring security and regulation to manage this. So in a sense, government will have to step in eventually, but then this is not even regulated. So that's the trade-off one has to say.
Any other questions?
Robert Milliner from Australia. I'd just like you to focus a bit more on the inherent conundrum here. A number of speakers have touched on it about, obviously from a user point of view, users want to use the full intent of technology and develop this and to make it user-friendly. And user preferences are global. But money and government's responsibility are country-specific. And so I see the large conundrum here is about the whole movement here is around using this to facilitate ease of use and a global ease of use, which has a lot to be commended to it. But ultimately, responsibilities of government come back to a country-defined characteristic. And you can see that in the debate around taxes and the way in which the perception that companies are moving taxes which are the property of their citizens to other countries. And so if you move that risk, and we can talk about allocation of risk and keep talking about that for a long time, but ultimately I think, as you said, Baro, countries will have to make a decision on that. And so the issue here is not so much what's the potential, is how do you resolve that conundrum?
Yep.
Does anyone want to tackle that? We're still acting locally in many instances.
Well, I think that I think you did a really elegant job of articulating the two things. You know, I remind some of my colleagues in different contexts that we're never going to hire somebody ever again, and likely never get a new client that didn't grow up with the internet and a mobile phone, right? So we have to your point, preferences and how people act are, increasingly becoming more uniform. But you said acting locally. The local here, by definition, starts to become global, right? A tax authority starts to enforce their perspective in protecting their interests, or financial regulator or prudential regulator, and then that can have implications. These are oftentimes they're multinational companies, or they are more multi-jurisdictional in their activities, and then that in and of itself creates a global ripple. And I mean, we see that with regulators, we see that with tax authorities, and maybe it feels a little bit like it's coming from west to east because the genesis of it might be a little crisis-driven, meaning global financial crisis-driven, and you're seeing some copycat regulation or up-regulation to offset. But I don't think that I don't think that those preferences are going to be able to evolve away from these sovereign interests playing a big role, because these sovereign interests that's the tidal pattern, that's the ocean moving up and down in the direction of the current. The rest of it, we're just tacking along in the wind to some extent. So I don't have an answer for you, but I think that conundrum is very vivid right now and getting more so.
Alan, isn't SWIFT an attempt to do just that, to globalize finance?
But clearly, I mean, I think your point is very right. I mean, what we see today, and being operational actually in 212 countries in the world, is that every single country has its own set of regulations, laws, and all that. And the reality is that most of the case, they're different. Even when it gets actually to the European community, where you have 27 countries and 18 on the Eurozone, yes, they still have the sort of European regulation, in addition actually to the national jurisdictions and laws as well. Now, we shouldn't also forget that above and beyond this, you have also countries that have no extraterritorial legislation, like the US. So you need to make sure that when you're a bank or when you are a financial supplier, that you not only comply to every single jurisdiction where you have local operations, but also in addition to that, the one that somewhere actually is superseding all the other ones. And that makes actually the real difficulties and the challenge for all the players you have in there. And I would suspect that the more, again, I'm coming back to that example, Alipay or other players will go abroad, will start really developing the international business, the more they will be confronted with that as well. I can imagine, right, as perhaps like the sort of 5 years down the road scenario, but the Apple stuff, right? They start actually proposing payment services in all the countries. Certainly, American citizens that today do not want to be part or reporting to the American administration, like you have an increasing number of them in those countries, they're making payments through Apple Pay. It goes straight to the US. The American administration has a view on this, and God knows what's going to happen. So, transparency is going to be critical into that as well.
And the other side of that, which is privacy.
And privacy, yes. Yeah.
Any other questions before we wrap up?
I want to ask about the relation between financial sector and the industrial companies. So are you recruiting more people from those industrial companies who have rich experience in his specific industry, not only financial bankers? And the second is, do you feel that the financial sector and the industrial companies are merged together closely than before? Thank you.
Well, 80% of new hires of my company globally are engineers.
Wow.
So I think, by the way, the number of engineers are really drying up. In the States, really drying up. I mean, China is very clever, producing, many, many engineers. So I think to produce engineers are going to be very important for the nation, I think. And answering your question, I think, those engineering and finance are getting very, very close to each other, I think.
Before we wrap up, I'd love to just go around the circle and see what your predictions might be for how this will end up in the next 3 to 5 years.
More inclusion is a word that I can hear. Not just of more people participating, but also technology participating in the game. That's how I see it going. With the government slowly using security as a mean of comforting themselves, but operating in niches. That's how I see the world going in the next 3 to 5 years.
Okay.
Things will change, definitely. But when you think about the vested interest around this currency or settlement, I think it has to move slow. It will move slowly compared to other innovations, I think.
So not as fast as one might think. Alan?
Well, I'm pretty sure that, of course, technology will keep evolving faster than ever, and will keep accelerating again and again. I think the financial industry will have to keep adapting to that. But I'm with you as well. Whilst you're going to have many more people, the unbanked, getting banked and all that, there will be a lot more interest, in national interest, getting involved into the definition or the future of that industry.
Yeah, well, I guess it's appropriate. Calvin gets the last word. You don't want to end on a grumpy note like me, but I'll borrow some words from smarter, more thoughtful people than me. And William Gibson, the famous futurist author, kind of saw the internet in some ways. He said, and I think it was something along the lines of, the future is here. It's just not evenly distributed. And I think that it's that inevitability that we're seeing tomorrow today. But that doesn't mean we're seeing tomorrow everywhere today, because in a lot of places we can barely see yesterday. But one of my favorite thought leaders on this topic is on all topics is Mark Twain, and he said, history never repeats itself, but it rhymes. And so, while the future might be here and is working its way through the distribution, we shouldn't assume that the history will have no resemblance to the past.
Calvin?
I'd echo a lot of the comments. I think over the next 5 years, we definitely will see upregulation and some slowing of the emergence and, let's say, distribution, however unevenly, of some of these new exciting technologies. I would say inclusion is a really exciting topic from the unbanked, from the, say, base of the pyramid. But just to end on another, maybe lighter note, one aspect of inclusion we haven't had yet is artificial intelligence. And I think one of the exciting aspects of cryptocurrency is machine-to-machine transaction. And I think that's something we're going to see emerge over the next few years, too.
With that, please join me in thanking the panelists for a fascinating discussion. Thank you.